Trade cryptocurrencies with an unfair advantage. Every month there is always a cryptocurrency that realizes a gain of 20, 70, even 300%. They're out there, you just have to pick them at the right time to take advantage of this real financial windfall. Imagine if you could easily detect the cryptos that are going to rise by several tens or even hundreds of percent in a few weeks. Wouldn't that be a big step towards financial freedom? You think it's not possible? In this video you will see how to do it. In this webinar you will learn how to detect these cryptocurrencies and how to trade them to get great returns. At Trading Like Heroes we've already helped hundreds of traders and investors to get better in the stock market. We have been looking for the best technical indicators since 1994. And I'm going to show you the most important things you need to know to succeed in trading. I will also show you the crypto radar station strategy for trading cryptos and getting a high return. Make yourself comfortable, make sure you're undisturbed for 10 minutes, grab a pen, some paper, and follow along. Let's get started. Before continuing, please pause the video and make sure you read the disclaimer. Before we get to the strategy, I want to remind you of one of the most important elements of trading. It's essential to keep this in mind. Stock prices, whether it's stocks, Forex, cryptos, indices or commodities, are stirred by noise. Without a trend, you get ranges like this. There are highs and lows. And you can frame them with supports, below, and resistances above. Of course, it's not always that perfect, the highs and lows don't always touch the lines like in these examples. Some traders like to go back and forth between these highs and lows, or peaks and bottoms. But, in reality, except in exceptional cases and over the long term, there is not enough price difference between the lows and the highs to make good profits. Moreover, you only know that there was a bottom after the fact. At some point, you don't know if you're at the bottom or not. Don't rely on the simplicity of these examples. Practicing range trading is not the best option. Moreover, these kinds of situations, horizontal ranges, are rare in the short term. If they can occur in the long term, in the short term it is not the rule. Because most of the time there is an upward trend, which comes down to this. Or bearish trends. But first things first, what defines an uptrend? According to Dow's theory, a trend is said to be up when the highs get higher and higher. And the lows get higher and higher too. In a downtrend, they get lower and lower. This rule is very important. Furthermore, in an established trend, the more time passes, the higher the prices go. Until the trend ends. And that's the problem. How do you identify the end of the trend or its beginning? More on this later. For now take note that the most interesting trends are those that have a strong slope. This is called strong momentum. Once this is said, prices do not go up in a straight line. In fact, prices move in phases. As you can see here, there are upward phases, called bullish swings, and downward phases, called bearish swings, or corrections in an upward trend. Every time the trend changes we see a reversal. In these situations we find classic chartist patterns such as diamonds, head and shoulders, wedges, and certain triangles. But the most basic and common chartist reversal pattern is the W-shaped bottom. Indeed, we can see that the prices draw a more or less distorted W. This pattern is fundamental. We will see later how to use it. For now, let's understand that prices make a kind of zigzag. Your task as a trader is to spot these trends and determine the channels by plotting supports and resistances on the chart or mentally. It's not easy, because one channel can contain others, as here. In fact, markets are fractal. Each part of a chart contains an equivalent structure. The first trick to improving your trading is to filter out the noise so that you can continue to follow the underlying trend as long as possible without triggering your stop loss. For example, you can view prices in both weekly and daily time frames. Prices will rise more strongly if there is an uptrend in weekly but also in daily. Thus, you will have to enter a position on a swing start in weekly, 1, and on a reversal in daily, 2. And to protect your capital, you can place a stop loss under the last weekly low. The second tip is a simple chart pattern known as the 1-2-3 pattern. Let's say we have a downtrend and then a reversal. The downtrend is made up of bullish and bearish swings. First, we'll spot a low and mark it with the number 1. Then we'll mark the next high with the number 2. And the next low, we'll mark it with the number 3. The rule is, if the price rises above the level of point 2, then you can enter the position. As for the stop loss, we will place it below the last low, point 3. In our example, the prices do not go above point 2, because we are in a downtrend. But let's take another example. This time, the price goes above the level of point 2. In this case, we have a trend reversal, and the rule of Dow is not respected anymore. We are no longer in a downtrend. Later, in the following example, we are in a bullish trend and the level of point 2 is crossed. This constitutes a new entry point. And the stop loss is still placed under point 3. Now, on the downside, it is the opposite. Point 1 is a high, point 2 a low and point 3 the next high. The sale is made when the price breaks the level of point 2 on the downside. Now let's get practical and see how this can be implemented in a trading software like Tradingview. Go to the Tradingview site, you'll find a link in the description, register by clicking on Get Started. And open a chart of a stock or cryptocurrency. You will get something like this. Type in the beginning of the name Tesla, for example, or another name, and a search window will allow you to find the financial asset you want to display. Select it. The chart for that asset will appear. Now look for example at this crypto. When you have a chart, you have to figure out what the channels, resistances and supports are. That can be tedious. There are a lot of possibilities. Fortunately, I'm going to simplify your work. In fact, I have developed an indicator that detects trends for you. You don't have to plot them in real life or in your head. The indicator does it for you. You will find a link to purchase this indicator in the description. But wait. If you don't want to get it, that's okay. Just stay. You can do the same thing with the indicator of your choice or with the supports and resistances plus the Dow theory and the 1, 2, 3 pattern. But I still advise you to get it. Because you'll see that its use is super simple and effective. To install this indicator, follow the instructions in the documentation. To add it to the chart, select the chart where you want to put it, then click on the Indicators menu. In the window that appears, type in the name of the indicator you are looking for and click on the indicator found. It will look something like this. Do not be afraid. It's not complicated. This swing trigger indicator is very simple. It is positive or negative. When it is positive, there is an uptrend. If it's negative, you guessed it, the trend is down. And when the bars are blue, the bullish trend is weak. Now, on the contrary, if they are green, it is strong. Then, if the bars are yellow, the downtrend is weak. Or, if the bars are red, it is strong. Finally, the black bars, positive or negative, indicate shorter-term swings. In summary, the indicator shows trends and their reversals. Then, a buy signal will occur when it turns positive. And a sell signal will occur when it goes negative. Now let's see how it applies to our chart. The indicator changes from negative to positive, yellow to blue, on the left. A bullish trend appears. If we switch to the weekly time unit, it is even clearer. In effect, you can clearly see the trend reversing on the right. You see, it's much simpler. Just look at the indicator. Now let's apply what we've learned about using 2 time frames. In what follows, I'm going to use 2 side-by-side charts. You need a paid Tradingview subscription for this. If you don't want to pay, you can display the charts one after the other. Otherwise, you will find a link to subscribe in the description. Tradingview subscriptions are not expensive. And you will get intraday data. We'll start by displaying the 2 charts. To do this, click on this Select Layout button. Then click on the first item in line 2. This will show you 2 charts in one. We're not far from having everything we need to trade the most volatile cryptocurrencies. What are we missing? Well, the method, the routine. And this routine is very simple. Indeed, we need to find the cryptos that are in an uptrend on the upper time frame and that start a bullish swing on the lower time frame. However, for cryptos we will instead take the daily and 4-hour time frames. So, the swing trigger indicator will need to be positive on the daily time frame and go from negative to positive on the 4-hour time frame. In the following example, on the left, in the 4-hour time frame, I have located the start of the uptrend in the daily time frame. I have also indicated the buy and sell signals. Finally, the most successful trades are circled. Now you have to repeat this routine with lots of cryptos. But it's tedious. Therefore, I have prepared something very useful. This is a program that will look for trending values for you. In fact, it's another indicator. But before we get to it, we need to build a list of cryptos to follow. For this we will use the watch list feature of Tradingview. This is the list you see on the right. If it doesn't appear, you have to click on the list icon on the right. Now, to create a new one, 1. Click on the arrow next to the name of the current list. 2. Click on Create a new list. 3. Give a name to your new list. Once created, it appears on the right. Then you can add values by clicking on the plus sign. Next, you need to build a list of cryptos to watch. The best way to do that is to look every day at your broker's website, for example Binance, and add to your list the cryptos that are strongly moving up. But, fortunately, I have already put together a list of over 200 cryptos. We'll talk more about this later. You'll have the option of retrieving the one I've already put together. And that will save you a lot of time. For now, let's assume that this list exists and that you have downloaded it from my site. It is in the form of a text file. Click on the name of your list, then on Import List. Find the downloaded file in the Open window, number 3, and click on the Open button. This imports the list. Except that a list will have been created with the name of the file. You can rename the list by clicking on the 3 dots to the right, then on Rename. Now, here's how to easily spot cryptos that are in the ascending phase. All you have to do is use a screener. I've developed an indicator that does this for you. It will scan a list of cryptos and detect those that are trending up. This screener is available for purchase in the description. With it you will get the list of cryptos that I have built. To install it, follow the instructions that are downloadable with the indicator file. This new indicator is called Crypto Observer. To add it to the chart, select the chart where you want to put it. Then click on the Indicators menu. In the window that appears, type the name of the indicator you are looking for and click on the indicator you found. This will add it to the chart. Once the indicator is installed, click on the cogwheel next to its name to display its configuration. You can configure the position, size, color of the indicator, see number 3. But the most important thing is to paste the content of your list into the field provided for this purpose, number 2. For this you can copy the contents of the file from earlier. Here is a little trick. Click on the column whose name is changed to order the values by decreasing change percentage. If you want to use another list of values, proceed as follows. Click on the Advanced View icon next to the name of the list. In the page that appears, scroll down a little and click on the Export List button. This will download the contents of the list as a text file that you can use as in the previous step. Now we get down to business. Leave the indicator configuration window open. Normally, if some values have a positive swing trigger indicator on the time frame of your chart must be in daily time frame, then its code appears on the chart, maybe along with others, number 1. Then click on the arrow to change the page, number 2. In fact, the screener detects the values that have a positive swing trigger for the time frame of the chart. It processes 20 values from your list. When you change the page number, it processes the next 20. And so on. For each value listed by the screener, add them to a new Tradingview list. To do this, open a chart in a new tab, open another list. Name it for example Crypto Observer 1D. And add the crypto to the list with the plus button. This way you can build up a list of cryptos that are trending daily. Then add the Crypto Observer indicator to another chart with the time frame 4 hours. But this time, check the Detect New Ones Only checkbox. And paste in the values field the content of the newly created list, the list of values in daily trend. If you don't remember how to do this, go back a few steps in this video. Now the indicator will show you the values that have just turned positive on the swing trigger indicator in the 4-hour time frame, number 2. These are the cryptos to buy. We will see a little later how to manage the trades. But you can already acquire this screener and the pre-made list through the link you will find in the description. If you haven't already got the swing trigger indicator, there is also a pack containing everything you need. In summary, with the Crypto Radar Station strategy you will detect values with positive swing trigger in daily time frame. Add them to a list. Detect the values of this list whose swing trigger turns positive in 4-hour time frame. Use the Dow theory and 1-2-3 pattern to enter and exit. Let's see how to handle the trades. We will only use what we learned about the 2 time frames. The Dow theory. And the 1-2-3 pattern. When the crypto is trending in daily and its swing trigger indicator turns positive, enter the trade. Add a stop loss under the last low. When prices move upwards, move your stop loss up. For example, here you can see that it has been moved 4 times. When the trend ends, your stop loss closes the trade. It's that simple. And, take note that, of course you can use the Crypto Observer Screener with other time frames if you want. Now, if you choose to use this crypto radar station strategy, I think that it's a very good idea. It will improve your trading and your profits. Tell me in the comments what you will be able to achieve with it. Thanks for watching.